Yeah, look, this could potentially become more complicated, but don't forget the Turkish lira is one of the highest yielding currencies. I mean, rates earlier this year were around 24%, then Erdogan forced rates down to around 12%. So most probably what would or could happen is that when the Turkish lira meaningfully weakens again from these levels, we potentially could see sort of measures to also increase rates, and that over time potentially should stabilize the currency. But yes, it's been always a volatile currency. But don't forget, also Turkey is, as a country, very much depends on foreign inflows. So the real question is whether, like Russia, these sanctions will be more broad-based, so that foreign investors potentially find it more difficult to participate in Turkey. That would be very negative for the Turkish economy.
Well, let's talk about the Turkish economy then, because you mentioned the prospect of higher rates. But if we are seeing this recovery in the Turkish economy stumble as a result of sanctions, higher rates aren't really going to be counterintuitive or counterproductive.
Correct. And in order to stabilize the currency, they most probably will have to raise rates. But don't forget, there has always been a big debate between Erdogan and his leadership and the Turkish Central Bank that Erdogan always wanted lower rates. So the Syria offensive most probably will cause him some inconvenience, that rates most probably will have to rise in order to stabilize the currency.
More broadly, when we look at investing in global markets, and we have this increased geopolitical risk when it comes to Turkey and Syria, how big of an issue is it for international investors, for those out there trying to make investment decisions? Is it just adding to the noise, or is it something that we really need to be paying particularly close attention to?
Look, I think it's actually beyond the noise. I think it's really a fundamental reordering of the world system. If you think about it, NATO is still Turkey is a NATO member. And it's also a NATO member that's buying Russian arms. So that, again, complicates the situation. And more importantly, if you think about it, I think what the price of gold is telling us as well, that more and more central banks are diversifying. So you have both Russia, China, and now Turkey increasingly realizing that the United States often uses the dollar as an economic weapon. And that potentially could lead to further diversification away from the dollar, especially when China and Russia join. And I think this is really what's happening. So you've got Iran, Russia, China, all increasingly diversifying out of the dollar. And don't forget that apparently this year, the central banks globally have been the biggest buyers of gold since 1971. So that's really the flip side of the US Trump administration's initiative to increasingly use the dollar as an economic weapon, that it leads potentially to more rebalancing on the currency front.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.